Hey there everybody, welcome back to FinBear channel. Today I want to go over when to enter a crypto coin or when not to enter a crypto coin. And today I'm going to use Dogecoin versus USD on the Binance US exchange. So a lot of people are still hype about Dogecoin. And I've said before, technical analysis might not be the end all be all when it comes to cryptocurrency because a lot of cryptocurrency is driven by sentiment and volume. But technical analysis can still be useful and help protect you in certain ways. And so what we have right here on my trading view chart is the daily candle. So each candle represents a single day. And as you can see here, this spans all the way back through 2020. It's not too far away back, but good enough so that you can see what's going on. As you can see, for all this time, it traded under a penny. Here, it hit a penny, then it went up, then it flatlined a bit, and then we've seen this really huge bullish momentum ever since April. And a lot of people are getting excited. This chart actually makes me feel better that I got out of Dogecoin. Because I'll admit, I was in Dogecoin back in here. And then I sold, yes I did. I sold when it hit over a penny because I got very excited. I sold it about, I think when it hit 8 cents, I sold at 6 cents because I thought I was smarter than the market. And I'll be honest, I did not foresee Doge doing what it did. It's been a meme coin. It was meant to be a joke. I didn't understand the utility behind it. I didn't really research the tokenomics on it. I just thought it was fun. I thought it was cool. I already owned it at less than a penny. And when I saw on Reddit that momentum was building up on it, I was like, oh snap. I added a few more $100 into it and I made some coin off it. I'm not mad. I'm pretty happy about it. And I actually posted on my Facebook to let my family and friends know. I think it was like January 27th. I was like, hey guys, this is about to pop. You at least want to double your money, get in this now. I had no idea that it was going to do what it did. I really didn't. Most who are in crypto probably didn't foresee this to happen. I did sell at 4 cents or 6 cents. I bought back in. I dipped a little bit lower, rode it up to about 23 cents. I admit, I thought it was going to go to $1. And when we had this big dip right here, I paper-handed. I'll be the first to admit I paper-handed Doge. But also, I needed the money for AMC. And I'm sure there's an ape out there who understands what I'm saying right now when you're like, if you got some big gains, and yeah, you can make some more big gains, but you've got a bigger play going on, you move it over. And was I stupid? Possibly. You know, I could have had over 70 or 7, I don't know math, but I could have taken it from 6 cents to 70 cents had I gotten out at the peak. But I needed that money for AMC because I was buying that at $7 and I had a boatload of profits from Doge I can put in at $7 and really let it ride because, you know, 500K floor. I'm just saying. But anywho, I digress, as I always do. So looking at this chart, it makes me feel safe and relieved that I did get out. I was part of the company that said, yeah, no, Doge might make it to $1, but I don't think it would happen within this year. I would love for it to, but with Elon and all that stuff going on, I just felt like it was getting muddied and a lot of crap coins started popping up everywhere. And I do not think Dogecoin is a crap coin, but it brought about more crap coins, which just made everyone scatter. Like, oh, I gotta get on this. I missed Doge, so I gotta get on SafeMoon and Shiba Inu and all the others. Not saying they're crap coins, but they popped up during the advent of all this going on. So I'd rather stay in more stable altcoins, even though that sounds like an oxymoron. So anyhow, the reason why this chart makes me feel like, whew. So this is to me, looks like a very popular head and shoulders pattern. And with that, what I mean is here's your shoulders, here's your head, here's your shoulders. And we're going to draw a neckline real quick, just so you can get even a better idea of what I'm talking about. So here's the neckline from that. And we're going to, I have it on Ray. That's okay. And here's the neckline to this. So this is the neckline to my head and shoulder pattern. And you're going to say, what does this matter? What does this matter? What's going on? What am I looking at? So for me personally, If I see this become a completion of a head and shoulder pattern, if price action falls below this trend line, it is extremely bearish. It's a very bearish sentiment. In fact, let me break out my handy dandy book. This is actually a book I study, and I think I might do a few videos on it and a few of the patterns. It is called the Encyclopedia of Chart Patterns. And right here what it says on page 406, of all the chart patterns in this book, the head and shoulders top is perhaps the most popular. This stems from its reliability, performance, and easy identification. Hush, kitty cat. In a bear market, the performance shines with just 1% of the patterns failing to drop more than 5% after the breakout. And the breakout means when it drops after this in a bear market, which we're not actually in a bear market, we're still in a bullish market, believe it or not. But in a bear market, less than, with just 1% of the patterns failing. So it has a 99% success rate that if it falls below this trend line, it will fall another 5% of price action. It says, and the average decline measures a large 29%. Traders not versed in chart patterns can guess what a head and shoulders top looks like and get it right. Surprises for that are many, but are all self-explanatory. If not, I discuss them later in the chapter anyway. So basically what they're saying is there's a high probability that if this drops below that trend line, below the neckline that I just drew, which is the bottoms between the head and the shoulders, if it drops below it, price is going to continue to drop. So it's very, very interesting. Again, I can show you guys this book real quick. I don't know if you can really see it from here. This is a great resource here. Here's the title page. So you can see it, so you can see the author. And again, I will post this. I actually bought the digital version off of eBay. But it's called the Encyclopedia of Chart Patterns by Thomas M. Bukowski. Really good read. I studied it a lot to learn the probability of certain things. So when I'm looking at it, I know if I feel good or not about it. So for me, Doge, if it goes below this line, it's definitely going to go down further. With that being said, when it goes down further, if and when it goes down further, I actually might look for a re-entry personally, just because that is such a strong pattern on a daily candle that probability is it might go back up again. I might find a reversal. So who knows, in a few weeks, I might come back and just say, hey guys, it might be time to check out Doge again, because Doge fundamentally is still doing well. More companies are accepting it along with other coins. But right now, if I were looking at this would not be an entry for me. It's for me personally, for my risk tolerance, it's too risky. And you might say, hey, wait a minute. Wait, this might be the beginning of a W. This might not be a head and shoulders, but possibly, just maybe, it's a double bone. It's a little sloppy. This right here could be a double bottom, and we're going for a W. It's a George W. We're bullish as heck. And you know what? You could be right. That is why technical analysis is so interesting, because it could be many things. It's all to how you interpret it. This could very well be even a scalloping situation. I don't believe it is, because it hasn't gone down low enough to be a scallop. It could possibly be a W. This could possibly be a double bottom. But even still, if it breaks below this point and closes, which means no wick, solid candle, if it closes below that, it proves the head and shoulders versus the possible bullish trend of a W. And you'll know that because if this thing starts to turn around and you start seeing green candles, let's see if I can make some paintbrushes. I don't normally use this, so we'll see if that works. If you see some green candles going on right here, then okay, I'm wrong, and there we got a reversal, and that might be an opportunity to buy. And to say, okay, this choo-choo train's going back up. But this is how you look at it. This is how you know this is why this book is so helpful, because it allows you to look and see what the probability for things are. It's not always right, but it lets you be as close to right as you can be. And I love it. I love learning about charts. I think I'm going to do some more videos on specific chart patterns so that you guys are more aware and can look at a chart and say, all right, that looks good, or, oh, I don't know about that. And so in addition to why I still think that this is not a good entry yet, and why I think that we have not found our bottom yet for what's going on, is right here. If you look at volume, the volume here just on Binance is telling us that we're below the average volume. For the 20-day moving average on the volume, it says right here yesterday, average is 147 million and it only traded 44 million. There's not a lot of bullish momentum going on here. RSI, this right here is a sign of a reversal. RSI went up and then price went up, but RSI went down. When RSI is divergent to price action, that is telling you you're in a reversal. This is not regaining steam to go up yet. It is a reversal. That's what that means right there. So if you're not knowing what I'm talking about, so here at this point, RSI was very high, and at the next point it went down. See how RSI is trending down? Oh, wait, I gotta click it. So RSI here is trending down. And even though RSI was at its highest, right here on this candle, RSI was highest here, but price action was highest here. And here the RSI is lower than the previous highest RSI. That is what we call divergent, and that is what we call, or divergence, and that's what we call a reversal, which means action is going from bullish to bearish, which means the trend is changing. The overall overarching trend has become bearish. What is exciting, I will say here, is that we're getting closer to oversold territory, which does mean that my original hypothesis that this neckline is actually a head and shoulders, like I said previously, and price action will drop below it, this supports that and says, okay, 5%, it might take RSI a little bump here and right here. You might see divergence on that RSI, where this RSI might drop lower and then price will go lower, but then RSI might go up. Even though price will go down a smidgen, there's your divergence again. And that's where you can say, okay, trend is going bullish now. It's time to get in. It's time to ride the gravy train. Same here with Stoch. Stoch is telling you, hey, we might be turning soon, but there's still not an oversold territory yet. I hope this was helpful for everyone. I know I got into a lot of technical things that might be above what you're ready to learn about, but this stuff will seriously, seriously help you. I have spent years studying these charts, trying to understand them, trying to make things make sense so that I can easily and quickly just eyeball things and say, yeah, sentiment's here, sentiment's there. Please let me know if this was helpful for you or not. Please don't forget to hit the like and subscribe. I am here for you. I'm here to help you. I'm here to learn with you. And I'm here to learn from you. So please don't forget to engage in those comments. Let me know what you need me to go over again, because sometimes I'll talk too fast, I'll talk too low, or I'll skip over things because I'll make assumptions that just aren't correct, that I might assume that you know what I'm talking about. And you're like, wait, what? What's RSI? What's this? What's going on? Let me help you. Communicate with me so I can help you guys even more. Have an amazing week. Have an amazing day. Have an awesome life. And just do great things. Put great energy out there into the world, and you will receive it in return. That's all I got for you guys. Go out there, be great, and let's go make some money.